Welcome back, and let's get the rupee on your screens. It has been choppy in the recent days, but today has been a steady day, 0.2% of a gain coming in for the currency. This is on the back of rebound in domestic equities and some weakness which is trickled down in the US dollar there. Abhishek Goenka, founder and CEO at IFA Global, now joins us on phone line. Abhishek, hi, good to have you. What's your sense really coming in for the currency? Has been range bound even as we see the news coming in from both sides. What would you want to watch out for, and what's your sense on the currency going ahead?
I think the currency is broadly in the range, as you said, and it's more of buy on dips at 65, 70, 80 levels, and on the higher levels, it's selling across 86.5 levels. So broadly, it will stay in that range till we see any major news breakout. But overall, we are expecting a weaker bias in the currency. We expect the rupee to depreciate to 67 plus levels maybe in a month or two. So I think all the importers should take advantage of buying at dips. There was not much noise about the FOMC. There was too much noise about FOMC, but we didn't see anything remarkable happening. So I think market is not taking much views on that. So I think the most important event which is going to be the actual event of the Fed, where everybody is expecting around 66% chance the rate hike is going to happen. So I think that's the most important event. The rest, I don't think much event is going to drive the rupee as of now.
So Abhishek, which side are you bending then? Are you looking at the range breaking, or do we continue like this in the next week or until the actual FOMC event, or are you bending towards 65, 67 as we head towards the last month of the calendar year?
So typically, we would see a slight appreciation happening in the rupee, maybe before the FOMC, which is always like before a big dollar appreciation, we would see a slight depreciation in the US dollar and in the dollar index, which we are also seeing recently. The dollar index went up, has come down, euro has again started going up. So probably a slight appreciation in the major currency pairs, but overall the US dollar is likely to get stronger. So I think in November, typically we see the rupee depreciating. So I think maybe in the last leg of November, rupee should depreciate a little bit. Before the event, it could appreciate, but overall the currency is going to depreciate in the coming few months.
What's your sense on the carry dollar, the carry trade that we are seeing in for the dollar, because that is strengthened quite strongly in last 1 month itself. It has been nearly 6% of a gain that we've seen coming in for the US dollar. Do you see that trend continue?
Yeah, I think that trend is likely to continue. We have seen people reducing their reserves also in Europe, across the world, across various nations. People are betting on the US dollar, and I think with the interest rates going up, the 10-year yield in the US going up, and the interest rates getting extremely negative in the case of the European, if you see the German bonds, the numbers are extremely negative for them. So there is a huge carry trade happening, and I think that's going to be that's always, the currency markets are always like that. They follow carry trade. So I think it's likely to happen. It's going to increase once we actually see a rate hike going forward. So I think it's going to increase in the coming months.
Abhishek, the other currencies, of course, have seen a decline coming in, even as we continue to harp on the fact that the rupee has been a relative better performer in currency as compared to the emerging markets and Asia. The high-yielding currencies, take a look at the euro, that is down more than 6% in the past month. Most of the other commodity currencies, whether it's a Canadian dollar, New Zealand dollar, Australian dollar for that matter, have continued to decline as well. So would you say that as we get into 2016, it is going to be a weaker currency trend for others apart from the USD?
No, of course. The other major currencies, of course, has fallen down a lot, and Indian rupee has recently started following the trend. So if I talk about Indian rupee, I personally feel that 62 to 66 was the range for the last 1 year, from last Diwali to this Diwali. And what we are expecting is possibly a range of close to around 65 or slightly below that, to around 69, 70 levels for the next 1 year, next Diwali. That's the range probably for the Indian rupee. And for the other currencies, I think euro and all should kind of come close to parity once we start seeing hiking situations happening across the world. And the rest of the currency will also take a beating. So Indian currency, though it has not moved much, but I think in going forward, a slight depreciation might happen.
And the other domestic factors, of course, to watch out for are the winter parliament session. Markets, of course, would keep a keen eye on to that one. The GST is something that everybody seems to be rooting for right now. And apart from that, the inflation concerns seem to be back as well, because we've seen pulses prices continue to gain up. The inflation numbers that got released in the previous week also have seen a slight surge coming in. And the El Nino factor still continues to haunt us. So even as the important Rabi crop sowing is underway, and the markets really would want to keep a keen eye on the weather as well, would you say?
Hello?
Yeah, Abhishek.
I can't hear you, I'm sorry.
Abhishek, I was saying to start with, do you think the weather concerns are back? We've seen inflation rise up once again. The prices of pulses and edible oil seems to be a concern coming back into the markets.
Yeah, there are slight concerns on that front, but I don't think that will affect the rupee very much. I think rupee at this point of time would be running more on the flows and on the carry trade, and of course on the Fed decision. So broadly, our currency would not be impacted too much on these factors as of now. And as talk about the winter session parliament, yes, of course, if something very, very remarkable happens, then possibly we might get a dip of 1% or 2% for a span of a week or something. But otherwise, I think the broad trend is not going to change because we have one or two news coming out. Because yesterday also you saw there are 4 or 5 news which came, which was very, very positive. But we didn't see much appreciation happening in the Indian rupee. So I don't think that is going to drive the market right now.
Clearly, it has been the agriculture commodity prices also which have run up quite strongly. Chana prices up 70%. Spices are up between 30 to 40% as well. And the edible oil space as well has seen 20 to 30% of a gain coming in for 2015. But moving away from that, Abhishek, and how would you look at the winter parliament session now? Because that's yet another thing where the markets and the corporate India, the economy as well, anticipates that some reforms perhaps could take place. GST is yet another thing where most corporate CEOs seem to be rooting for.
Yeah, so it's anybody's guess. It's difficult to say that how the parliament is going to shape up. Everybody's watching that. And so it's very difficult to say, Manisha, that how it's likely to be in the parliament. But then we expect that something good should happen. And if something good should happen, then definitely we would see a bounce back in the markets. But keeping my fingers crossed on the parliament. As all the points that you mentioned are, everybody's looking at the GST, etc., etc. But then again, I'm keeping my fingers crossed in the parliament, so difficult to say what's going to happen.
Well, we all are keeping our fingers crossed on that one. Abhishek, thank you so much for joining us with your sense on the currency. So some depreciation not ruled out for the rupee. Lots of international data is expected. Of course, the biggest one is the FOMC meeting on December 15-16. Markets are anticipating a 70% chance of a possibility of a Fed rate hike coming in. And that is what we are factoring in at this point in time. The rupee, of course, has seen 0.2% gain coming into the markets. It broadly has been in a range of 65.90 to 66.30 on the higher side. And that's pretty much the range that you can see tomorrow, the last day of the week as well. Having said that, it also has to do with the US data in sense of properties and the Chinese numbers as well expected tomorrow from the markets. That is where the currency space will take its fresh cues from. But with that, that's all the time that we have on the show. Stay tuned for Rush Hour coming up next.